viewers, before we welcome on board our experts and get your stock queries answered, just a word of caution. When you write to us, please very clearly mention the name of the stock, the holding period, how long you've held the stock for, what exactly your query is, and we'll get them answered by our questions. If this is about a stock that you wish to hold in your portfolio, once again mention the name as well as the time horizon you are looking to hold the stock for. But on that note, let's begin this edition of Buy Now Sell Now. We have Kunal who's joining us in the studio, and we also have Lancelot who's joining us on the fundamental side. Lancelot Dcunha, the Chief Investment Officer at ValueX Wealth Connect LLP, joining us. Good morning to both you gentlemen. Let's start with the first query coming in, and Lancelot, let's begin with you. It's a stock that's been spoken about a lot these days, and that's IndusInd Bank. We have our viewer Seema writing to us from Dubai. She's looking to invest in IndusInd Bank. She's saying, now that we have seen all this uncertainty, is all of that behind us? Is the stock looking stable from now onwards, and can she buy now? She's in it for the long run, is what she has specified. What's your view coming in on IndusInd Bank?
I think based on the fact that almost all the negative news is now factored into the price, and whatever audits have been instituted, we expect that the results are already getting reflected. The company has made some significant provisions on the derivatives front. So I think most of the negatives have got priced in, and probably from now onwards, given that the environment for financial services companies and banks is improving, we should see the stock moving up, going from here as the results come better. Better in the next 1 or 2 quarters, you'll see a re-rating happen and the stock return back to its growth trajectory.
Right, so that's the take coming in on IndusInd Bank. Very good morning to you, Lancelot. Good morning to you as well, Kunal. Let me take this next query then, and this one is coming in from K. Anand, and he's writing to us from Hyderabad. Wants to know about Tata Tech, 275 shares of Tata Tech at a price of 880, and Tejas Network 170 shares at a price of 292 rupees per share. Kunal wants to know whether he can average these counters or no. Maybe Tata Tech, I believe it will be difficult for you to talk about, given the chart history will be limited for Tata Tech, and also the stock is reacting to his earning. Tejas Networks, what's your take on this one? 892 is the buy price. That one also reacted to his numbers yesterday.
Yeah, I think I would suggest that Tata Tech could be a stock which you can look to add at current levels. With the recent history, the stock being divergent from its long-term averages, there could be a point where Tata Tech could come back into a mean reversion phase, and that's a process of say another 1 to 3 months. The volumes in the last 2 to 3 weeks has also started to look a lot more attractive. So I would suggest an add on Tata Tech. But Tejas Network, I'm not too much convinced that the stock is on the verge of a turnaround, because it still looks like that the stock is showing signs of weakness on the monthly charts. There has been negative trends on the stock on price front as well as on the support front. So I think on that front, I would suggest an avoid on Tejas Network. Not an add, but Tata Tech you can add at current levels.
Okay, that's the take coming in on both Tata Tech as well as Tejas Networks. Lancelot, coming to you. Next query coming in from our viewer, Mr. Satyaveni, who's writing to us from Hyderabad. He's a long-term investor, and the stock in question is IRFC. He has 900 shares of IRFC at a buy price of 181 and TCS 90 shares at 4,110. He's asking if we should continue holding or exit both of these stocks, IRFC and TCS.
So I think IRFC, did come out with good results, as well as they have given an outlook that net interest margin should increase to about 2% going forward. There is a non-railway business book that is being built up, and with that, their profitability should improve. Plus, given the weakening, or the lowering of the interest rates in the marketplace, that should augur well for IRFC's growth. NPAs have been under control. So from an asset quality standpoint, the company seems to be taking into its stride the situation. So I think one can look at IRFC, although at this point in time, I think post-result stock has moved up a little bit. And maybe if you want to buy for a longer term perspective, you can look at some correction and then buy, or you can pick up some now, and you can always wait to add further at a lower price. As far as TCS is concerned, I think the entire scenario regarding global IT services is at a point where various projects have got delayed, and that is reflecting in the revenue growth as well as in the profit growth. But I think that over the next 12 months, things should stabilize. And in terms of valuations, TCS is still trading at about 20 times its forward earnings, so which is reasonable for a company like TCS. So one can accumulate the stock slowly, or use every decline to add, because over the period of next 2 to 3 years, I think IT services will come back, back to higher growth and higher profitability.
Coming back to you actually, Lancelot, this one is coming from Bharadwaj, writing to us from Coimbatore, wants to know about Tata Power, 600 shares, average buy price was 279 rupees per share. He's looking to hold on to this counter for the next 2 to 5 years, but does it make sense for him to go ahead and add some more of exposure at current market price for Tata Power, which is somewhere around 400 rupees per share?
Yeah, I think the stock has really, jumped up from maybe around 335 levels to about 400 levels in the last 15-20 days. But from when one takes a longer term view of, if you take the next 3 to 5 years outlook for this business, Tata Power has been focusing a lot on the renewable energy business. It has expanded its renewable capacity, which would be generation capacity would be close to about 30 to 35% of its overall capacity in the next couple of years. Additionally, it is focusing on high value areas like charging stations for cars, etc., where the rates are far higher than general electrification for corporates and for industry. So given that profitability is looking up and the new business that is getting added on is high margin, you are seeing a very strong growth trajectory for Tata Power. But valuations are, at the moment, it's fully priced in. A lot of the positives already priced into the stock. So definitely hold on to your positions and use every decline to add to your position in the stock.
That's the take coming in on Tata Power. Let's move on. And Kunal, coming to you, next query coming in from our viewer Neha, who's writing to us from Bangalore. She's making 17% profit in SBI cards and 10% in AU Bank. She's asking for targets for the next 1 to 3 months. So quite the short-term view is what she has requested. But SBI card and AU Small Finance, what's the targets that you're spotting?
See, I think both these stocks, and I've been tracking this very closely, both these stocks, the setup for both of these stocks is very attractive, because AU Bank, for example, in the last 1 week, 10 days, I think has recovered from 626.30 levels to now 700 plus mark. That's a very steep kind of a recovery, even post the results. SBI cards, on the other hand, the stock went through a correction, but then when we look at this over the last 3 months or so, the stock has been very resilient and has been looking quite strong. Both of these charts are very encouraging, if you ask me. I would believe that if you hold on to this potentially for the next 1 to 3 months, I would expect at least another 10% kind of an upside into these stocks. They could probably surprise on the upside more if the markets show signs of more confidence. But so far the chart patterns over the last 1 week and 3 weeks have been very bullish. I would suggest a hold.
Right. Kunal, B. Soumya has written to us from Chennai, wants to know about IDFC First Bank. 77 is the buy price for the short-term period, is what she wants to hold on to this one. Should she in fact hold on, exit, or average her positions in IDFC First Bank? What's your take on this one?
I think you should hold on. If you're looking to average, I would suggest 69 plus as a mark where you can consider averaging out, because that's where I would believe that the stock would confirm a breakout of multiple resistances. There are some indicator resistances which could happen. The bearish indicator which was plaguing the stock over the last 13 months or so of the selling, that could start to get into a reversal once the stock confirms a breakout about say 16.5, 70 mark. That could be a round figure number which you can keep an eye on. So above 70 is where you should look to average IDFC First Bank.
Okay, so those are the levels for IDFC First Bank. Lancelot, coming to you, our viewer Shravan is writing to us from Hyderabad. He holds Ola Electric. He's got 200 shares at a buy price of 76 rupees per share. He's asking if he can hold it for the long term. What are you making of this company right now? Of course, we've seen a lot of regulatory trouble coming in the past for this one, but do you believe now it's all behind us, and do you believe that this would make for a good buy at this price?
No, unfortunately, I don't believe that it will make for a good buy because this space is undergoing a tremendous competitive intensity. The legacy players in the electric space have also entered the market. That is Bajaj, TVS, Honda have entered the electric two-wheeler space, and they are giving stiff competition to the new players like Ola, Ather. Ather is also getting listed at the moment. So as I see it, over the next 3 to 5 years, there will be some consolidation in the space, and people with financially strong balance sheets and capability to provide good quality service and reach to the various customer base will be in a better position in order to to survive and make money and then reach the critical mass where they can capture significant market share. Over a period of time, we are going to see maybe 3 or 4 players who will dominate the space, and then it'll become a very concentrated market place. So whether Ola is going to be one of those in that space, very difficult to say at this point of time. And hence one should probably wait it out or look at some of the more, stronger players who are already in the business, both in legacy business as well as in the electric two-wheeler business, because they would be far better poised to provide, to be able to survive over the longer term.
Right. This next query, Kunal, I have from Rakesh Gupta. He's writing to us from Delhi. He wants to know about Colgate. He has about 300 shares of Colgate at about 3,000 rupees per share. He wants to know whether he should exit or hold on to this counter. On the charts, how is Colgate looking to you, given the fact that this one has been doing absolutely nothing? In fact, the loss is pretty less compared to the rest of the market.
Yeah, on a YTD basis, the stock is absolutely flat. But then I think the stock in the last 3 months has recovered from 2300 to now 2650, 2680 mark where it's trading right now. So the recovery has been quite decent for Colgate, and that goes in line with how the FMCG pack and most of the stocks in the FMCG sector have recovered. I would believe that you can continue to hold on. I would not suggest an average at current levels, because stocks like Colgate, they do fairly well when you look at these kind of names from a long term play. And the fact that these stocks have already gone through a 20% kind of a correction in the last 6 months prior, maybe the near term worst could be behind to the stock price. So would suggest a hold.
Okay, hold call on Colgate is what Kunal is suggesting. Lancelot, will come to you. Next query is coming in from our viewer, Mr. Krish, who's a senior citizen. He holds Divi's Labs 55 quantity at a buy price of 4,615. He's asking if it would be a wise step to hold the stock for the next 3 years. What is your view on Divi's Labs, and how are you thinking of this stock compared to the entire pharma pack?
So I think, Divi's Labs is going to be one of the companies who could get impacted by tariffs, coming into the US, because a lot of their business does come from the US. At the moment, the tariffs are mainly on goods that are produced and sold, and they're not really on the services space. But obviously, then there is going to be some impact on business for them. So I think one should be a little cautious at this point in time, and wait for the entire scenario to play out. Maybe in the next 3 to 6 months, we will see how things evolve in the US economy, and then you'd get a better sense of what would happen for DVs, because anyway you are planning to buy in for a longer term. So it's better to wait for the next 3 to 6 months and have a look at, then take it up from there.
Alright, so that's the take coming in on Divi's Laboratories. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get to answers for all of your stock-related queries. We have our experts who are answering your queries today. We have Kunal Bothra on the technicals. We have Lancelot Dcunha on the fundamentals. Let's continue taking your queries then. And the next query that I have is coming in from our viewer. This one is coming from Ghosh Dada. He's writing to us from Delhi. Actually, we've already spoken about Tata Tech a short while ago, so let me skip that then. Let me take this one from Anjali Khurana, who wants to know about MTAR Tech. 2,176 is the buy price for this one, Kunal. 111 shares. What should our viewers do?
So you can continue to hold on. I think after some time, the stock is showing signs of breakout on the indicators. I think after the last 3 months, As I'm looking at the daily charts, the MACD is given a breakout about the neutral line. That generally indicates that you're looking at the stock potentially showing signs of some recovery. But this could just be a near-term recovery for the stock. Maybe 1600 to 1700 could be a potential near-term target range. Once the stock reaches those levels, I think that's where you may want to revisit whether you want to hold on to the stock or not.
Okay, so those are the levels to watch out for and the strategy recommended by Kunal going ahead. Let's move on from there, and Lancelot, coming to you. Next query coming in from our viewer, Mr. Shaurya, who's writing to us from Gurgaon. He holds 48 shares of Exide Industries at 502 rupees per share. He says he can continue to hold for another year. If you would recommend, should he continue to hold or should he now sell?
So I think, as far as Exide is concerned, a lot of their profitability depends on the raw material prices, and we are seeing some amount of cooling off on raw material prices at this point in time. However, it's still trading, at almost 40 times earnings, which is fairly expensive for a company like Exide. So if he's in profit and it's a good time, he can look at exiting this and maybe moving into other stocks which can give better risk reward returns. That would be an option because the stock seems to be priced in at this point in time, and in terms of valuation seems to be a little bit expensive.
This next query that I have is coming in from Rajesh. Rajesh has about 700 shares of Coal India at an average price of 480 rupees per share. Can he recoup his loss, Kunal?
Yeah, very much of a high chance. So, one is that dividend, which the stock pays on a consistent basis, and the other is that Coal India seems to have gone through a very interesting kind of a correction, because the stock rarely gets into that 20%, 30% kind of correction in a span of 6 months to 9 months. But this is the phase where Coal India has gone through such a correction. The stock has fallen from 550, 580 levels to I think 350, 360, which is the recent low for Coal India. And I think after that kind of a sharp correction, it looks like that the stock would probably get back into a gradual uptrend. But the only catch with stocks like Coal India is that they are very low beta stocks. So for the stock to come back to your cost price, it would not be a matter of I think few weeks. It could probably take months or maybe many quarters. So I think that's the only catch with a stock like Coal India. But it's a good hold from a long-term play.
Okay, so may take some time to come back to cost price of our viewer, but still a good hold recommendation coming in from Kunal. Lancelot, let's come to you. The stock in question is Power Grid. Our viewer is holding 40,000 shares of Power Grid, average at 350 rupees per share. That's quite a significant amount coming in. And last few months, he's saying that the script has undergone a lot of correction, but now it is gradually increasing. Last 3 months, in fact, the stock is up almost 6%, as we can see on the charts. He wants to know what could be the forecast going ahead, and this is Mr. Sindhu, who's writing to us from Abu Dhabi, UAE.
So as far as Power Grid is concerned, it's in a fundamental growth phase. This stock will continue to grow because of the government's thrust on improving the transmission equipment and infrastructure in the country. There's also a move to smart grid, systems whereby power can get easily allocated across the various grids that are operating in the country. So from a business perspective, yes, Power Grid will continue to grow because all the orders for transmission equipment flow through Power Grid, and Power Grid then earns money from the transmission of power that takes place within their infrastructure. And the power consumption and demand is both growing, and that means that Power Grid will get higher transaction charges going forward. So I think Power Grid is in a strong bull market, and one should consider, maybe holding on to it and maybe even adding at lower levels, because over the next 3 to 5 years, you'll see significant profit growth, which will lead to price growth as well.
Right, this one is from David, writing to us from Chennai. Wants to know about Vodafone Idea, purchased about at an average price of 14 rupees per share. When can we expect this stock to rise, given the fact that you have the government shareholding and the fact that they converted the spectrum dues into equity? Very big multi-dollar question right here actually for you, Lancelot. What to do with Vodafone Idea?
So I think, Vodafone Idea, while, there's a lot of action in terms of movement and news flow, and the company seems to have at least staved off a potential default on its loans, it looks very difficult for this company to really, come back to its profitable growth ways, because even though there's a conversion of debt to equity, the equity itself has become very large, and there is a need for capex over the next 3 to 4 years, as the company has to upgrade its infrastructure in order to provide 5G services to the subscriber base, who will, if they do not get 5G at the same quality as what they're receiving in Jio or Bharti Airtel, they will look at switching. So I think the company has to spend a lot more money on infrastructure spending, which will impact its profitability. So it will take a very, very long time. So there are better options to look at investing your money in at this point in time. Even if it means a loss, one can look at booking the loss and moving that capital to stocks which will generate much higher risk return, profits.
Book your loss and exit Vodafone Idea, is the call coming in from Lancelot. Kunal, we have a query from you from our viewer who's also called Kunal, and his query is on NHPC. He's asking if now is a good time to enter this stock for a long-term horizon. What are some price targets that you're spotting?
Yeah, you can, because I think the stock has again come back into a good corrective phase from 120 levels to the stock fell down to 75 or such. Now at 85 mark, I think the stock or the risk reward is attractive. If you're looking at this as a long term, I would look out for, say, targets somewhere in the range of 110 to 120 in the next 12 months or so for NHPC. And then once the stock confirms a breakout above those levels, we could look at much higher targets, say maybe even 150 plus mark for the stock in that kind of a time span. So I would suggest a buy as well as a hold.
All right, so that's the take coming in on NHPC from Kunal, for Kunal, that is. The next query that I have is coming from Bipul. He's writing to us from Delhi. Tata Motors, 1,200 shares purchased at 700 rupees per share. He wants to keep the stock in his portfolio for the next 10 years. Lancelot, is it a good choice? Do you think it's a good choice? Is it a good price? And no doubt that right now there are some hiccups because of the geopolitical tensions as well, and I beg your pardon, not geopolitical tensions, more so of because of tariff tensions that is impacting Tata Motors. Keeping all of that aside, for the next 10 years, Tata Motors, a great stock to have in our portfolio?
So I would, differ at this point in time, because, you have to compare it with maybe other stocks in a similar industry to see whether they will outperform in terms of growth. So when you look at Tata Motors is basically a JLR play. So 90% of its business as well as profitability comes from its overseas business, which is the Jaguar Land Rover business. So that can be, dependent on so many aspects or so many global conditions, things happening in the US market, things happening in the Chinese market. China has been a big market for JLR in the past as well, and we could see some amount of slowdown in Chinese economy, impact sales coming out from there. So I think from a valuation perspective, or also from an opportunity perspective, Tata Motors, there are many variables which can change over the next 5 to 6 years, and that could impact its valuation or its future as a profitable company or driver of growth going forward. So I think if one is looking at a 10-year perspective, it's much better to be in a company maybe like a Maruti, which has a strong domestic focus and is one of the leading players in the domestic market, has introduced hybrids, and because of its partnership with Toyota in terms of manufacturing, has now got a complete range of products that can be sold under the Maruti Suzuki, the Suzuki brand, along with some export potential as well, because at least the business gets de-risked to a large extent from global issues. So if one had to look at it from a 10-year perspective, I would still feel it may be a better option to go with maybe a Maruti Suzuki vis-a-vis Tata Motors.
So that's the take on Tata Motors, and Maruti Suzuki looking like a better pick compared to Tata Motors right now. Let's move on from there, and Kunal, coming to you, two stocks in question, Tech Mahindra as well as Cipla. This is a view. Mr. Krishna was writing to us from Chennai. He's asking for a view on Tech Mahindra and Cipla, both for an investment of about 3 years and above. What are both of these looking like, and would they make for good holds in the portfolio for 3 years and plus?
Yeah, I think both of these stocks would be good candidates for buy as well as hold from 3-year perspective, because I think multiple reasons. One, of course, that both of these stocks on the current price front, they've started to look attractive. Yes, the news flows around the IT specifically has been on the negative side, but I believe that stocks like Tech Mahindra, they generally do very well in the starting phase of when the IT cycle starts to get into a turnaround, and we're seeing that many of these IT stocks are showing signs of stability here on, and then potentially say over the next 3-6 months, most of the negative news flow which is assumed to be coming out for many of these sectors, that get digested for these names. So I think in that context, I would suggest that both Tech Mahindra as well as Cipla could be good buys from 3-year perspective.
Alright, so that's the take coming in on Cipla. Let me take this next query then, and this one is coming in from our viewer. Let me take this one from Balan. He wants to know about Jio Finance as well as Aditya Birla. I'm not sure which Aditya Birla Group company he's talking about, but Kunal, Jio Finance, do you think it makes sense to actually go ahead and buy right now?
Not exactly at current levels. I would suggest that maybe wait for a 10-15 point drop on the stock price, because I think looks like the stock has come back into a slight bit of an overbought territory on the 255 mark. Say closer to 240 to 45 range could be a decent range for you to add on to Jio Finance. And I'm assuming that if the second stock is Aditya Birla Capital, then I would believe that that's a stock which you can consider buying at current levels, because of the steep correction the stock has gone through and the stability the stock had provided in the last 2-3 years. So that's a much more better stock. You can look at current levels, but Jio Finance, I would suggest maybe at 10-15 points on the downside could be a good buy.
Yeah, right. You are right. Actually, Kunal, it was Aditya Birla Capital, just got a bit confused given the fact that we have too many from the stable of Aditya Birla Group that is actually listed on the board. So, Snehi, the next query.
Well, absolutely. So, Lancelot, query for you. This query is coming in from our viewer Krish. Stock in question is Indigo. He holds 15 shares at a buy price of 4,459. He's asking if it's a good pick for 3 years, and he also wants to add more. What's your take on Interglobe Aviations?
I think, if you look at Interglobe Aviations, it is factoring in all the growth that was there in the air passenger traffic, and we are seeing, the growth actually improve over the next year or so, both as far as air travel is concerned, as far as hospitality is concerned. So in that sense, the business outlook is looking good. However, valuations are still on a little bit of the at a higher range. So I think if one has to look at this stock, one should look at waiting for a correction in the stock before adding it to the portfolio. And if you look at it from a longer term perspective, it can, these stocks are cyclical. So you will see a significant rise, and then, as markets may correct, or as, economies start to adjust in terms of supply demand, as far as airline seats are concerned, you may see prices come off and then margins again taper off. So I think one is we are looking at the higher end of the cycle where, capacities have not yet come on stream, and because of the shortage of capacity, airfares and profit margins are rising. But this does not remain consistent for a long period of time. So it goes through these phases. So given that we are at the top end of this phase, I would stay away at this point in time from, Indigo Aviation at this time.
All right, so that's about Indigo or Interglobe Aviation. Let me take this next query that is coming in from Indu. It's a technical query, Kunal. She wants to know, how does one approach defense stocks now? Will they break past their previous highs? She has Bharat Dynamics as well as Mazagon Dock in mind. I'm not sure that whether she's going to go ahead and invest. I believe that's what she's trying to look at, to invest in them afresh, that is Mazagon Dock as well as Bharat Dynamics. So what are the charts indicating? Do you think that any time in the near future these stocks will try and retest those highs?
Yeah, the possibility is very high because many of these stocks, Bharat Dynamics, whether it's Mascot Dock, whether it's the formidable names like HAL, BEL, these stocks have broken past about series of Fibonacci retracements. So we're looking at 50% and 61.8% retracements from their 2024 highs for these stocks, and it seems like many of these stocks, HL is for example is just about on the verge of breaking past about the 61.8% retracement. BDL, BEL, these stocks have already confirmed a breakout already. Mascot Dock has been one of the stronger ones. That stock has already given a break past much above those retracement levels. So in terms of price comparison, there is a very strong likelihood that these stocks can be amongst the first ones to try and break past about the previous lifetime highs. The only concern is the news flow which surrounds this entire sector. Right now, the news flow could probably be a catalyst where these stocks are showing signs of a recovery or a rally. But if the news flow abates, whether these stocks have the firepower and momentum to move up higher, that's the only I would say concern in the short term. But on the medium to long term charts, I would believe that these stocks hold potential to come back to their lifetime high levels and break significantly past about those zones.
Okay, so that's the take coming in on a couple of those counters. Let's move on. Lancelot, coming to you for Paytm. Our viewer, Ms. K. Himwati, holds 600 shares of Paytm at 900 rupees per share. So we'll take a contra view coming in. In fact, we'll get a combined view coming in rather. Kunal, we'll come to you after Lancelot is done giving his funda view, because our viewer also wants to know the short-term target for Paytm. So Lancelot, you go first, and after that, Kunal, will come to you for what Paytm is shaping up to be like on the charts.
At this point, Paytm is trying to evolve from pure payment business into a financial services business and offer digitized processing for almost various kinds of financial products, right from insurance to investment products as well as loans, etc. However, they are facing a lot of competition from very many other players in the marketplace. And there are a lot of banks and institutions who have also moved into the digital space. And so the competition is hotting up in the digital space. At the moment, Paytm is not generating profits, and it still has to spend a lot on marketing and customer acquisition, which is much easier for people who already have bank branches and small finance banks, etc. So I would think that the case for and valuations of Paytm are not that cheap at this point in time. So I think that would make for a case of to avoid putting money into Paytm at this point in time, because as the other players strengthen in the business, we could see the valuations change of Paytm, and so you might see it stagnate for a long time. And if it does well, then it could move up, or it could actually go down depending on how the competition plays and on its business and the financials pan out. So at this point in time, I would rather wait rather than buying into Paytm.
Kunal, what's your view on Paytm then, given the fact that on fundamentals, you have a Lancelot that's saying it warrants a wait and watch mode at least to get into Paytm. But what's your take on the charts? Because Paytm, surprised investors quite sharply, given the fact that the way how it actually saw the sharp rise from those 370, 350 odd levels, I believe. And from there on, the stock only picked up, also nudging towards the 1,000 rupees per mark. I think he surpassed that also, right? Briefly?
Yeah, 1,060 was the high for Paytm, recent high.
Recent high. So now what should an investor do for the short term?
See, you can start nibbling at current levels, because there is a lot of possibilities and probabilities over here we are talking of. For example, the stock in the last 2 months has done quite okay. I think recovered from sub 700 mark, if I'm not wrong, to now just close to that 900 range. There is a possibility that the stock can come back to the 1,000 plus levels. The only concern with a stock like Paytm, purely on the charts, is the volumes are missing for the stock, and we generally require a much higher set of volumes once the stock is heading towards a breakout. That's the missing part for a stock or a chart like Paytm. So that's why I would believe that you can look to just buy at small quantities at current levels. Once the stock breaks past about the levels of say 950, 970 mark, that could be a zone of extreme confidence where you can look to add further.
So that's a combined view both on the funda and technicals for Paytm. As we slip into a short break, let's revisit the numbers from Adani Green Energy. Healthy quarter 4 coming in for Adani Green Energy, with revenue and EBITDA rising more than 30% and cash profit remaining healthy. Listen into what Executive Director Sagar Adani had to say on this as we slip into a very short break.
within just 2 years of commencing work. Now, we are on track to complete the 30 gigawatt project by 2029. We attained a high solar CUF of 32.4% in Q4 FY25 at Khavda. The impressive figure underscores the site's high resource potential and impact of deploying advanced technologies such as bifacial N-type modules, horizontal single-axis trackers, and waterless robotic cleaning systems. Our relentless focus on execution, operational excellence, and advanced technology has yielded outstanding results, further cementing our leadership in the renewable energy sector. In FY25, we surpassed $1 billion in EBITDA, a testament of our robust business model and sustainable growth. Our energy sales increased by 28% year-on-year, reaching 28 billion units. Revenue from the power supply grew by 23% to rupees 9,495 crore. EBITDA increased by 22% to rupees 8,818 crores. We continue to prioritize digitalization, robust capital management, and best-in-class governance. Our digital initiatives encompass advanced analytics, automation, and AI-driven decision-making processes to optimize project development, operations, safety, and governance. As an important milestone in our capital management journey, Adani Green refinanced its maiden construction facility, which was instrumental in the development of the world's largest solar-wind hybrid renewable cluster in Rajasthan, which was delivered in FY23. This long-term refinancing, rated AA+, represents door-to-door tenure of 19 years with fully amortized debt structure. It is well aligned with the cash flow life cycle of the underlying asset portfolio. We in fact have a very comprehensive capital management framework to fully fund our growth up to 50 gigawatts by 2030, while still maintaining a very, very strict credit discipline. We are committed to our environmental, social, and governance goals. In pursuit of building green energy in the greenest way possible, we are glad to share that all our operations are now water positive. We have achieved this goal 1 year ahead of our original target. We continue to maintain top rankings from esteemed global ESG rating agencies, including being ranked number 1 in Asia and among the top 5 globally in the renewable energy sector by ISS ESG. Sustainalytics also ranks us amongst the top 10. We attribute our success to the dedication of our team and the steadfast trust and support of our shareholders and partners. Together, we are committed to creating lasting value for all of our shareholders and delivering 50 gigawatts of clean and affordable power by 2030.
Hi there, welcome back to Buy Now Sell Now. Let's keep it going with all your viewer queries. And Kunal, we'll come to you. This query is coming in from our viewer, Mr. Gajanan. He's planning to sell Jubilant Foods and instead invest in Bajaj Finance or Tata Communications at the current price for a 1 to 2 year time period. He has 2 questions for you. First, should he sell Jubilant Foodworks at all? And second, if yes, what would be your pick between Bajaj Finance or Tata Communications?
So Bajaj Finance, of course, could be a better bet, out of the two. Again, I think the only concern is that Jubilant Food is also looking attractive and the stock is on the verge of a breakout, just about that 725 mark on the spot level. So maybe I think you could just tweak the timing of the switch, from a short-term play. If Jubilant Food, say, comes back to 750, 760 mark, or say closer to 800 levels, that would be a better point where you can look to make that switch. But I think, if you are looking to switch from the 2 names which you mentioned, Bajaj Finance undoubtedly is one of the strongest name. I think makes sense to go with that.
All right, so that's the take coming in on Bajaj Finance and Jubilant Foodworks. This one is coming from Kusuma, who's writing to us from Pune. Wants to know about Macrotech developers as well as TVS Motors, Kunal, for a period of 1 month. Out of these two, which one would you suggest to buy? Do you think at this point in time, can you actually look to just pick stocks for this 1 month trading purpose? I'm just asking as like an investor awareness, given the fact the conditions are so volatile right now.
Yeah, they are very volatile, and with earnings at play, with the geopolitical risk, and what's happening across the globe in terms of tariff, etc. I think there's so much of news flow surrounding that it's very difficult to predict what could happen to the markets in the next 1 month, especially for the month of May, which historically has not been a very quiet kind of a month for the markets, even on a statistical basis. But nevertheless, I think out of the two names which you mentioned, I would probably believe that maybe Macrotech developers or Lodha could be the one which could start to look a little bit more attractive at current zone. The stock is closer to the 1300 mark, 1298 on the spot basis. Even if you look at this, say with the next 2 to 3 weeks of a time frame, you can potentially look out for 1380 to 1400 as a near-term target for the stock.
Okay, so Laura looking good between the two. Lancelot, we'll come to you. Our viewer, Mr. Subramanian, is writing to us from Chennai. He holds NCC. We don't know the quantity, but his buy price is 249 rupees. He has got this 1 year ago. He's asking if now is the time to average for decent return in the nearer term. Stock is at 218, 219 levels. His buy price is 249. What's the view on NCC?
So, NCC basically is one of the leading construction and engineering services companies. But given its history of, its past track record of profitability as well as execution of projects, I think it's always better to move to some of the larger and more established players. So I would actually recommend moving out and staying invested maybe in something like a Larsen and Toubro, who will offer much better risk reward benefits from going forward from these kind of levels.
Right, so that's the take coming in on some of the infra plays that one can look out for. Kunal, this one is coming from Avijit, writing to us from Delhi. Wants to know about HDFC Bank. He has a sizable lot, about 2,620 shares at a price of 1,529 odd rupees. He has ICICI Bank as well, 3,300 odd shares at a price of 1,043 odd rupees. Should he add positions to either of them or both of them, or any other bank or NBFC that you would advise?
So just hold on to the existing set, and maybe I think if possible, and if you're looking to add further, then I would believe that the likes of RBL Bank as well as AU Bank, these are the two names which have actually started to look a little bit more attractive. These stocks are heading towards a classical signs of breakout, 200 DMA breakouts, swing breakouts. So these are the two names which you can add from the banking names.
Okay, so that's the take on the banking space. Lancelot, coming to your viewer, Shafi is writing to us from Chennai. They're asking if they can start accumulating Tata Chemicals at this price and hold for a long term for 5 years or above. What's your view on Tata Chemicals?
So Tata Chemicals is a commodity based company, and given the prices of commodities at this point of time seems attractive. One can look at adding to Tata Chemicals at this point of time because it is coming up with capacities. But like in all commodity companies, one has to be careful that you do not hold on through the peak of the commodity cycle, because these companies, the performance can also be cyclical. So Tata Chemicals is a very large player in the soda ash space, and as well as in the fertilizer space. So one should look at the way these commodities are playing out, both domestically as well as overseas, and then decide when to enter and exit. But otherwise, Tata Chemicals is a good investment from a longer term perspective as well.
That's the take coming in on Tata Chemicals, and given the fact that yes, these chemical counters also get impacted, what happens geopolitically, so wait and watch out for those factors as well. But on that note, thank you so much, Lancelot, as well as Kunal, for joining us on the show and also sharing your views on various stocks and help resolve queries. And with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Snehi, myself, and the team that put the show together. Thank you so much for watching.